Welcome to the Deep Dive. This is where we take all that source material you send us, the reports, the research, all of it, and really dig in to find the insights that matter most. Today, we're doing a deep dive specifically for you into a company that basically started the whole digital payments game. PayPal Holdings, Inc., tickers PYPL. But the real question we're digging into is this. Is PayPal this established giant maybe having a bit of an identity crisis? Or is it actually setting itself up for a comeback in what's become a really, really crowded market? Okay, let's unpack this. We're going to try and cut through the noise, give you the clearest possible view of PayPal as an investment opportunity.
That's the plan. And what's great about the sources you've provided is they let us connect the dots, from the core financials, market feeling, even technical charts, gives that holistic view, which is just crucial for making informed investment decisions. You get the whole story, not just bits and pieces.
Absolutely. So let's start right at the basics. I mean, most of us probably have PayPal, use it all the time, don't even think about it. Is that really all there is to it? What's the core strength maybe people overlook?
Well, the real power, I think, is that two-sided network they've built. Fundamentally, PayPal's a tech platform, right? Enabling digital, mobile payments, consumers, merchants all over the world. They've been at this for, over 25 years, building this huge network connecting people, businesses across something like 200 markets. And really importantly, they own Venmo, which has become massive in the P2P space, peer-to-peer payments, especially with younger folks.
Okay, so it's way more than just a button on a website. It's this massive digital web. Yeah. Can you give us the investor vitals? Where are they based? What sector?
Sure. So it's PayPal Holdings, Inc., NASDAQ, DYPL. They're generally put in the credit services industry, which is part of the bigger financial sector. Headquarters are in San Jose, California. Main business is still those online and mobile payment solutions, plus Venmo, and then these other value-added things like Buy Now, Pay Later, BNPL. And that network effect you mentioned, it's powerful, makes it really tough for others to just copy what they do. As of late 2024, they had around 434 million active accounts, consumers and merchants.
Wow, 434 million. That's a huge base. But does that huge network actually translate into strong financials right now, or are there maybe some hidden weaknesses we need to know about? Let's get into those latest numbers.
Good question. The very latest numbers from their Q2 2025 earnings, they announced these July 29th, 2025, show some pretty interesting things, actually. Revenue came in at $8.29 billion. That's up 5% year over year, and it beat the FactSet consensus, which was around $8.08 billion.
Okay, a solid beat on the top line. But you know how it goes. Sometimes companies push for revenue, but the profits suffer. How did the bottom line look? Was it sustainable?
Yeah, good point. Adjusted earnings per share, the EPS hit $1.40. Now, that's an 18% jump year over year, and it also beat the consensus estimate of $1.30. So, they delivered on both revenue and earnings. Active accounts kept climbing, too, up to 438 million, about a 2% increase just in that quarter. And what really caught my eye was Venmo's revenue growth. Really strong, up over 20%. That's its best growth rate since way back in 2023. Seems like things like that Venmo co-branded debit card are really clicking, especially with younger users.
Wow, okay. So they beat on revenue, beat on EPS, and they actually raised their full-year profit forecasts. That sounds like a pretty strong signal, doesn't it? What's this telling us about where PayPal's heading?
Well, it definitely signals confidence for management, right? In their operations, their outlook, they bumped up their full-year guidance for transaction margin dollars. That's basically the gross profit on transactions, a key efficiency measure. Went from $15.4 billion up to $15.5 billion. And the adjusted EPS guidance, that got raised too, from $4.95, $5.10, up to $5.30. If you look broader, financial health seems okay. Debt to equity was pretty stable, around 62.3% back in March 2025. Liquidity looks good. Short-term assets cover short-term debts, and operating cash flow covers their debt reasonably well, about 53%.
That all sounds pretty stable, but I think I saw something in the Q1 numbers, a flag maybe, around cash flow. What was going on there, and should you be worried about that?
Sharp eye. Yes, that's a fair point to bring up. There was a pretty big year-over-year drop in operating cash flow in Q1 2025, down almost 40% to $1.16 billion. And free cash flow took an even bigger hit, down about 84% to $333 million. That looks concerning on its own, but you have to put it in context. The company's sticking to its full-year free cash flow forecast of a pretty hefty $6 billion to $7 billion. So that suggests the Q1 dip might have been maybe temporary. Increased investments, strategic spending, something they expect to pay off later in the year. Doesn't look like a systemic problem based on that full-year guidance. They clearly expect a big rebound.
Right, okay. Context is key there. So understanding the performance is one thing, but how exactly does PayPal actually make its money? What's the core business model, and what metrics should you really focus on as an investor?
Okay, so the vast majority of their revenue, over 90%, comes from what they call transaction revenue. Essentially, fees they charge for processing payments between consumers and merchants. Pretty straightforward. The rest comes from other value-added services, things like their credit products, data services, that sort of thing. Now, for investors, a key metric to watch is definitely the PE ratio, price to earnings. As of late July 2025, PayPal's PE was sitting around 17.29. What's really interesting is that's way lower, like 59% lower than its average PE over the last 10 years, which was closer to 41.82.
59% lower. That's a huge difference. Does that just scream undervalued?
Well, that's the debate, isn't it? It's a guess it might be undervalued based on history, but some analysts argue, maybe the market is just re-rating PayPal, seeing it less as a high-flying growth stock and more as a mature value play now. So the question for you as an investor is the market missing something here? Or is this a fundamental shift in how PayPal is valued? It's not immediately obvious.
That's a really important distinction. Okay, and what about returning cash directly to shareholders? Any dividends?
That's a crucial point. PayPal Holdings does not currently pay dividends. Zero. So if you're looking for that regular income stream, this isn't the stock for it. Instead, their strategy is reinvesting profits back into the business, expansion, innovation, and also pretty aggressive share buybacks. They announced a huge $15 billion share repurchase plan, and they expect to execute $6 billion of that just this year.
Okay, so no dividends, but they are returning value through those buybacks.
Exactly. And that's key for you as an investor. No dividend check, but those big buybacks reduce the number of shares out there, which can boost earnings per share and provide some underlying support for the stock price itself.
Right. So maybe not for the income investor, but potentially interesting if you're focused on capital growth, especially with that low PE. Okay, let's pivot a bit. We need to talk about the challenges. I mean, even strong companies face headwinds. What are the big competitive threats and external pressures you need to keep an eye on with PayPal?
Oh, the competitive landscape is intense.
Yeah.
It really is a battleground. First off, you've got the big tech giants. Think Apple Pay, Google Pay. They're leveraging their massive user bases, their phones, their ecosystems to really challenge PayPal's core business, that branded checkout. Then you have the sort of emerging fintech players, companies like Stripe, really popular with developers, Block, which owns Square and Cash App, very strong with small businesses, and PVP, Adyen, focusing on global integrated payments. These guys are growing fast, carving out niches.
You mentioned PayPal's network is a big advantage, but with all these new options, is that moat, that competitive advantage, still as strong as it used to be? How do they defend it now?
That's a fair challenge. And yeah, new players pop up all the time. But PayPal's sheer scale, and maybe more importantly, the trust they've built up over decades, that's still really hard to replicate. I mean, think about it. How often do you just click pay with PayPal without even thinking? That deep-seated trust is a powerful, if maybe less tangible, asset. But beyond direct competitors, there are other major risks. Macroeconomic uncertainty is a big one. Inflation, interest rates going up, recession fears. All that can hit consumer spending, which directly impacts PayPal's transaction volumes and revenue. And then there's the regulatory environment. Fintech is heavily regulated, anti-money laundering rules, consumer protection, data privacy. It's complex. And regulations keep changing, especially around new areas like crypto, which is relevant because PayPal has its PYUSD stablecoin. New rules could mean higher costs or operational limits.
And security, right. They handle so much sensitive data. Is that still a key differentiator, or has everyone else basically caught up on protecting users?
It's definitely still a differentiator, but you're right. The baseline expectation for security across the industry is much higher now. Security threats are constant. Cyber attacks, data breaches, fraud attempts, they're always under attack. So maintaining really strong fraud prevention, using AI in all their data, is absolutely critical. It protects customers, builds trust, and avoids huge losses from things like chargebacks. Their history and scale likely give them an edge here, but it's a constant investment.
Okay, it really does sound like a nonstop battle on multiple fronts. So the million-dollar question then is, how does PayPal not just survive all this, but actually thrive? Let's flip it around. What are their internal strengths, and how are they using them to adapt and move forward?
Right. Despite the pressures, PayPal has some really significant strengths they lean on. That vast two-sided network is still number one. Over 430 million active accounts globally, remember. That creates powerful network effects. Hard to copy. Plus, their global reach around 200 markets over 50 currencies, that's huge access.
and the brand recognition, like you said. But is that trust actually driving new growth, especially with younger users who might naturally gravitate to newer apps like, well, like Venmo itself or Cash App?
That's exactly where their innovation strategy is crucial, and Venmo is the prime example. It's incredibly popular, especially with millennials and Gen Z. And now, like we saw, it's showing real revenue growth. It's becoming a key growth engine. So they are connecting with that next generation. They're also pushing BNPL solutions, buy now, pay later, adapting to how people want to pay. And they're not ignoring future trends either. Moves into crypto and AI integration, launching their PYUSD stablecoin, using AI to improve services that shows they're looking ahead, not just defending the past. Add to that their ongoing strength in fraud prevention and risk management, leveraging all that data and AI, plus continuous strategic partnerships working with banks, card networks, e-commerce platforms like their deal with Wix that expands their reach. And don't underestimate their data capabilities. Being able to analyze billions of transactions gives them huge insights into user behavior and helps fight fraud.
Oh, and from a technical analysis angle for investors, it's interesting. The stock did dip after earnings on July 29th, maybe some sell the news reaction.
But it had already bounced back strongly, over 35% from its lows back in April. So for you looking at the charts, it's less about specific price points maybe, and more about watching key support and resistance levels, seeing how volume reacts to gauge that short-term sentiment. Is it just consolidating or is something else happening?
Okay, so putting it all together, it sounds like a company that's definitely not standing still. It's using its core strengths, the network, the brand, the data, to actively evolve and compete in this really fast-changing market. Let's try and synthesize all this now. What's the overall investor outlook?
All right, let's try and balance it. On the positive side, you've got that strong established market position. You've got impressive growth coming from Venmo now, clear focus on improving profitability, and significant shareholder returns to those big buybacks. Plus, that historically low PE ratio, 59% below the 10-year average, definitely suggests potential undervaluation. That's attractive. But on the other side, the factors to watch are serious. The competition is intense and coming from everywhere. Big tech, fintech startups, traditional banks. Macroeconomic uncertainty is still a cloud over consumer spending. The regulatory environment is always shifting. And because they rely so heavily on transaction fees, they absolutely have to keep innovating with new services to drive growth. So zooming out, short-term bumps are possible due to the economy or competition. But PayPal's longer-term story really seems to hinge on successfully monetizing Venmo and these newer services, and just defending its market share through constant innovation. That low PE might signal, like we said, a shift from being seen as a pure growth stock to maybe a more stable, cash-generating business. So for you, it's about carefully weighing those pros and cons, that potential value against those real risks.
Okay, that's a great summary. So, given all that analysis, here's a final thought for you to chew on. What really stands out about PayPal's long-term play is the endgame just being a better payments button? Or could they be subtly shifting towards becoming something more fundamental, almost like a fintech utility, powering the background of future commerce, maybe even decentralized commerce? And what would that kind of shift mean for its value down the road? Thank you so much for joining us for this deep dive, and especially thank you for providing all the source material that made this conversation possible. We really hope it was useful for you. If this deep dive was helpful, please subscribe.